All right, we're kind of getting close to the end of the course, and I want to start raising some fundamental policy questions. And the first question I want to raise is the question of subsidies. We have various subsidies for home ownership that are in some sense designed to tilt the family's decision toward owning a home rather than renting. The first example is the capital gains tax exemption. If you are an investor in a rental property and you get a capital gain, you pay a tax on it. If you're owning your own residence and you get a capital gain on it, that capital gain is exempt from taxes. So that's that's an important tax subsidy to ownership. The mortgage interest deduction is a little different in that it affects both the owners of rental properties and homeowners. So the mortgage interest deduction gets a lot of discussion in the press and so on as a big tax expenditure, but in fact interest expense is deductible for a landlord as well as a homeowner. So if you took away the mortgage interest deduction for homeowners but you allowed landlords to deduct interest, you'd actually be tilting in terms of mortgage interest deduction, you'd be tilting things in favor of rentals. So the mortgage interest deduction is generates a lot of revenue, or loses a lot of revenue for the government, and it's somewhat regressive, like sort of any deduction in terms of interest taxes. That is, the people, poor people can take less advantage of the mortgage interest deduction than rich people. But in terms of the decision to own versus rent, you can argue that the interest deduction is actually fair in that it applies both to landlords deducting interest and homeowners. And then finally we have subsidies in the form of the Federal Housing Administration, the Veterans Administration, which offers subsidized loans. We have the GSEs, or we've had them before. Right now they're in conservatorship, Freddie Mac and Fannie Mae. And then another form of subsidy is that mortgage securities have had low risk weights in the capital requirements for banks, which encourages banks to hold mortgage securities. So that's another form of subsidy. And so the broad question is, why subsidize home ownership? What is the public good in home ownership? There's a kind of a sort of statist view that it sort of makes people more loyal to governments. It kind of ties people down. So one notion is that you're tying people down. You make them better citizens. Because they own land in the community, they're going to care more about the community and so on. So there's that argument. There's a kind of the opposite argument, a libertarian argument, which it fosters independence, that when people own something, they become less dependent on the state, perhaps, or anyway, that claim is made. Not sure I agree with it. And there's this suggestion that people will take better care of what they own. And to me, that suggests that there's some kind of problems with contracts, with rental contracts, because in theory, I think you should be able to create a rental contract that would have an incentive for both renters and landlords to take care of their properties, but maybe that can't happen. Maybe there are too many subtle issues in contracting, so maybe people will take better care of owner-occupied properties. Certainly we believe that's true in general. Okay, so those are some of the arguments for subsidies. But I want to emphasize that most of it's odd that most of the subsidies are in the form of mortgage payments. Why is it that we subsidize borrowing as opposed to we could subsidize people getting down payments? We could have a savings program that would allow people to save on a tax-free basis for a down payment. People have talked about that. It's things like 401ks for down payments, that sort of thing. Why do we subsidize borrowing? And I think the case for that is actually pretty weak. I think there's this view that housing is the great middle class investment. And that view is what the special interest groups really push. And so, if you think of people buying stocks, and in a lot, broadly speaking, an investment in an index fund, a stock index fund, is a better investment than investing in housing overall. On average, it performs better. But we wouldn't let somebody invest in an index fund by putting 5% down or 0% down. In fact, the margin requirements for investing in the stock market are 50%. And even then, trying to get an index fund on that kind of margin would be very difficult. Even though that would be much safer than buying a house with a 50% down payment. Maybe not much safer, but I think somewhat safer. And so we require a much lower down payment. And so what we're doing is we're subsidizing borrowing and therefore subsidizing speculating in housing. And I think we ought to step back and ask, is that the right thing to do? Should we be heavily subsidizing speculating, or because that is in part what creates a boom-bust cycles in housing, is that people sort of pile on and speculate and buy with little money down? Or should we, if we're going to encourage people ownership at all, shouldn't we encourage ownership with less speculation? So my thesis is that these special interests who want to, who can make a lot of money in the financing of lending, as in addition also the realtors and home builders, all want to see people speculate, putting very little money down and taking out large mortgages. I don't think that, if you think about it carefully, I don't think it's really in the public interest for that to happen. I think that's something that generates private gains and on net public losses when people have to bail out, when the taxpayers have to bail out institutions after a crash. So so the question is, A, should we be subsidizing home ownership? And I think the case for that is not terribly strong. And given that we want to subsidize it, why do so many of the subsidies take the form of inducements to people to take out large mortgages? Why couldn't we concentrate the subsidies into encouraging people to make larger down payments? So I'll end this talk on that note.